Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, December 31st, 2012, the last day of the trading year. So let's take a look. This is the last day again. And then after that, I don't know what's going to happen in 2013, but I don't like what I see on short-term and long-term basis according to what the waves are telling me. Okay, Friday's action, this huge downdraft, probably 24 points in the last hour of trading, because there were disappointments over the fiscal cliff, fiscal responsibility, however you want to look at it. But as I've mentioned back here when this was like 14, I said that no matter what happens with the resolution in Congress, there's not going to be a happy place for investors. I think there are going to be compromises that either the banking system won't like, or Social Security won't like, or the Democrats won't like, or the Republicans won't like. However you look at it, they're going to end up kicking the can down the road, and the waves are telling you right now, with this, not only with this huge move down that looked like it was already happening, that I already forecast was going to happen at 14, and when it broke the 1421 line, that there is also a crossover. If you can see, let me stretch that out a little bit. The 8 and the 21 is crossed over on the exponential moving average, and the 8 is also across the 55. The 21's about to cross the 55. As long as these keep moving down, then we will keep moving down on the S&Ps. Also, this is now we are at 6:20 in the evening Central Time on Sunday, and we finished at 1384 on the S&Ps. We're now, so we kicked up 800 points at one point in the first trades in the aftermarket on Sunday. But you can see we're up 500. We were up almost 900. So this may be good till 1395. It's not going to go much further than that. It did take out, one of the key things is it did take out this spike low right here at 1391 on the overnight mini crash when there was no deal last week. That came back up, had a big tail on it, but just kept on winding down. So this was actually the opportunity to get in when it failed at 1421, which I mentioned earlier in previous videos. All right, let's look and see what this looks like on a 21. The 21 was telling you all the way back in December 19th, right? This date right down here. Just follow the T1 here. As a reminder to those who are just joining, these are Triton waves. So this is Triton wave 1, 2, 3, 4, and 5, abbreviated as T1, T2, T3, T4, T5. I have them on short-term charts, I have them on long-term charts, tick charts. You can trade this. You can trade these on any time frame for any stock, any ETF, any futures. I concentrate on the S&Ps and stocks and the SPYs. So you can see this was giving a sell signal back on December 19th, and it really 1 rolled into 2, rolled into 3, rolled into 4. There really has been, except for some spike ups right into the 377 exponential moving average, which happened really nicely. So a nice little spike up on Thursday, immediately neutralized Friday morning, and then completely taken out Friday afternoon. We are down below 0 on T1 for the 21-minute cash. That brings us down below 0 across the board, which is a rare sight. So the last time I can't see the last time they were up across the board or down across the board. Last time they were down across the board was back up at 1422 in November, and that had a hellacious 70 point move to the downside in 4 days. Except for this little blip in T1, T2, these were down dramatically. So what you're looking for now is a move for, now these become very temporary. On tremendous moves down, the T1, T2 become very ephemeral, very short-lived, and you're looking for a good solid move for any buying entry, any entry buy point, at least T3, T4, and T5. All right, let's take a look at what these are doing on a daily chart. I'm sorry, on a tick chart. Okay, this is the 1597. Now, on days that are slow, then you have to use the 987 or even the 610. But this is very, very active on Friday, Thursday and Friday. Nice moves here. This is T2 here on the yellow, moving above 0. And moving down below T1 as a sell point, use the next higher wave up as a sell. And then use this wave, you can use this as an entry, use this as a sell. And even though this is still in a sell mode, even with the S&P's up 500 points, 550 points on Sunday evening. It may go above 0 a little bit, but please make note that T1 on the daily and on the 21, they're mostly buried below 0, all the waves, and also this anchor. You can use T1, T2 as an anchor. You can use the 21 on the daily as an anchor. You can use the 21 as an anchor for trading the 1597 tick chart, and these are all. You can even use T5 as an anchor to trade T1. So nice. Wouldn't have taken this move right here. Just would have used this as a place to get out, because the blue line on T5 is below 0, and on the 21 cash it's below 0. But you can use it to get back in here, which was a nice move from 1405 right into the close of trade at 315 at 1383. Okay, I am going to look at my favorite stock, and the only stock I'm going to look at tonight is Apple. And from now on, I'm just going to selectively pick stocks out that I like, one, maybe two, and because I want to encourage you to upgrade your portfolio by taking advantage of a new consulting service that I initiated last week. So let's look at Apple. Apple on the 8-period exponential moving average crossed on, let me see, bring this out one line. It officially crossed below the 377, which is a really, really negative sign for Apple. This reinforces, let me see here. It didn't actually go down a lot on Friday, but it was near the low of the day, and it was 5 points off its high. But the main thing is, it did not move up. It finished, here's where it finished. It's below the 377. But more importantly, one of the aspects that I like to look at is where it is in relationship to the Fibonacci exponential moving averages. So just as a reminder, this is the 8, this is the 21, the red is the 55, the yellow is the 89, the green is the 144, the white is the two things. They're not especially in order because they're all intertwined at this point. The white is the 233, the purple is the 377, the green is the 610 exponential moving average, and the orange is the 987. So this is what's happening, and I've made mention of this in several videos, that Apple is doing a dance on the Fibonacci levels. It went from the 8 to the from the 8 to the 21, went sideways, went from the 21 to the 55, then to the 89, danced sideways for about 5 or 6 trading days, came down to the 144, danced sideways, came down to the 233, danced sideways, came down to the 377, and then it made this spectacular run from 505 up to 597, 598. Okay, it bridged two main Fibonacci progressions here, but then it took like 8 days to do that and only 3 days to come back, and then it bounced. It's like a ping pong ball. The biggest bounce, then the next bounce, and then the next bounce. Except the second bounce went below the 377, which is absolutely crucial. And then it bounced up again, only one progression into the 8-period moving average, and then it bounced down. So I still contend, and this is the way I'm playing this stock, that Apple will move its way down to let me see, this is a 610 exponential moving average at 458. And let's just move this up here to see what this looks like. Let's get a bigger chart here. So also this is moving up into its into a trend line that goes back at least a year. Okay, it goes back to June of 2011. So my target for this is between this trend line that goes back 2 years, which is at 470, and the exponential moving average, which might be rising up a little bit. So 465 to 470 is my target on Apple. Also, you can trade, if you are interested, you can trade Apple as a day trade, because even though these are all below zero and the T5 is about to go below zero, there are some just really nice quick trades in here. You know, 513 up to 521, and then 517 down to 506, 506 up to 5. Back and forth. You can do this all day long on Apple. Just use you know, a 70 delta. So you're basically you're in lockstep with the trade. If it moves 6 points, you're getting 4 points. So on options trade. All right, I'd like to review for those of you who have seen this in the last video. You don't need to look at this, but for those of you who haven't, last week I launched a Triton Wave Consulting, which uses the same format that I've been doing on the on the 65 videos that I've uploaded on YouTube for the past 4 months. Except this time, this is catered like a concierge service to the individual investor, to your individual portfolio. I will do a video for you for each individual stock of your choosing, and I will email it to you, and it's payable through PayPal. If you email me and tell me if you are a short-term trader or a long-term trader, if you want to trade this 3 times a week, then I'll send you 3 videos a week. Whatever you want to do. My waves were highlighted in Mastering the Trade, written by John Carter, and they've been used around the world for the last 4 years, from everywhere from Singapore to Japan to the United States to Europe, Russia. All right, so the introductory offer that I am offering until midnight New Year's Eve is $99 per stock on a video. Now, if you want 2 stocks, then it's 99 times 2. I can put it on the same video. If you want to trade this twice a week and you want to do some day trading or swing trading, then it's each time is a different is a new video They're all time sensitive, so it's whatever your needs are. If you want to do it if you need it that day, then it's $199. These are all processed through PayPal, and as soon as the payment is received, you will get delivery of the video, and it'll be emailed to your email box, to your inbox. You can get in touch with me at tritonwaveguy@gmail.com. As I say, each request will be handled as a separate transaction because this is all about timing. So if you have a stock that you want to just like look at and see in your portfolio whether you want to keep it for the next 3 or 4 months in this downturn, I will do a Triton wave analysis of that stock for short term and long term, and you can just like walk away from it for 3 months and come back and do another update if you want. I'm limiting this to the first 50 accounts that sign up because I don't want to be overwhelmed by doing thousands of videos. So the first 50 accounts, once it signs up, it's basically locked down. And if you have a major account that you want me to, I have limited it to. Hang on. I originally thought that I should limit it to 10 stocks per account, but if you have a specific portfolio that you want me to look extensively at, then just please email me and we can make separate arrangements. Again, this offer for $99 is good until midnight Central Standard Time, December 31st, so it gives you another day to take advantage of this. As far as the track record goes, my track record stands for itself, stands on its own. I have 65 videos up there. I've made some pretty amazing calls. I have made some mistakes, but I've made some pretty spectacular calls on Goldman Sachs, on GLD, Apple, and if you just look over some of those videos, the record speaks for itself. So don't get yourself caught in a position where there's tax loss selling and then it just moves into the next year and you start losing money. The $99 per stock is well worth any investment that you have that you could have a liability on if the market starts moving down. So good luck trading. The market is closed on Tuesday for New Year, so have a wonderful New Year celebration, and be careful, be safe, and I will see you at the next update. Happy New Year.